Welcome back to Buy Now, Sell Now. Let's cut across to Vinny, who's standing by to walk us through the consumer goods sales figures, which seems have crept back to pre-COVID levels in June. But hi, Vinny. What are you gathering from the volume uptick that we're seeing in the consumer goods space?
So, Varun, consumer goods space, this space has been, working even through the lockdown, especially FMCG companies. And now, the consumer goods sales are back in June, are back to their pre-COVID levels. So, we are seeing great signs of recovery here. And, obviously, this is positive signs for both consumer durables as well as FMCG companies. Now, first, we'll talk about FMCG companies. So, there is a bit of panic buying which led to high sales during this quarter, especially as for packaged food items as well as hygiene and healthcare products. So this is what had seen a good uptick in this quarter, and that is why FMCG companies are expecting a mid-single-digit growth in the June quarter, and mainly led by this pent-up buying sales. Even Britannia, to that extent, the managing director even said that because out-of-home consumption has stopped, people have actually gone in and bought a lot of packaged food items, and that is why they have increased, a lot of their food consumption has increased for in-house products, and that's why they're seeing a very good growth in food consumption and FMCG businesses. Even Mr. Sunil Kataria of Godrej Consumer Products said that within urban retail markets are doing quite well, even though full recovery of operations are still left. The wholesale market is much better than the retail market, as people are buying in bulk, and the bulk market is still doing quite well. And on a month-on-month basis, May and June have improved much more compared to April. Now, talking about consumer durables and consumer electronics, over here, yes, there is a slight bit of a glitch because they're still discretionary spends, but in that also, where 95 to 100% of their capacities are operational for most of the consumer durable companies, the overall sales growth is not as high as their operational capacities, what they are working at, but they are seeing signs of recovery. Their demand is improving month-on-month basis. Like LG said, in the June month, the growth is around 15% higher than last year. So obviously, seeing a great improvement over there. Sony TV sales have also improved on a year-on-year basis, and they are almost flattish on a year-on-year basis, but they're seeing a good growth there. While Panasonic in refrigerators, they are saying that they have seen the fastest growth ever of 43%, and televisions is up by 50%. So these segments are also showing growth, and that's why they are overall up to pre-COVID levels, is what the reports are suggesting.
Okay, Vinny, thanks much for getting us the consumption update. Moving on to banking space, and some updates coming in on Yes Bank. The board has approved a fundraise via the FPO route. Neha is joining us with more on that. Neha?
The board of Yes Bank has approved fundraising via a follow-on public offering or an FPO. The bank, in an exchange filing yesterday, said that the capital raising committee of the board has approved fundraising by way of a further public offering. The bank also said that the committee will meet on or after July 10th to approve details such as price bands, discounts, amongst others. Meanwhile, sources have confirmed to us that the bank is looking to raise rupees 15,000 crores via this FPO. If you remember, the bank had already received approvals from both its board and shareholders to raise capital up to 15,000 crore in March this year. Our sources have also told us that the FPO is likely to hit the market early next week. This FPO will be Yes Bank's second round of fundraising. In the first round, Yes Bank had raised rupees 10,000 crores from a consortium of private and public lenders led by State Bank of India as part of its restructuring. The bank is in dire need of funds. It needs to boost its capital base. If you look at the capital adequacy of the bank, it stood at 8.5% as on March 31st, 2020, which is below the minimum regulatory requirement of 11.5%. If you look at Yes Bank CET1 ratio, it stood at 6.3% as against the requirement of 7.375%. So the bank definitely is in need of funds. The bank's non-performing assets have been on the rise. Along with that, bank's deposit base has also contracted over the last few months. Like I said, sources have told us that the bank's FPO is likely to be launched early next week, and we will bring you all the details. It will be interesting to see how investors respond to this FPO.
All right, thanks for that, Neha. Let's move forward to a different segment, Titan's Q1 update. But once again, Vinny is with us to walk us through what to expect from the numbers. Over to you, Vinny.
Titan came out with Q1 FY21 performance update. Now this update is, as much as we could expect, that's how it's gone in line with what we're expecting, especially with the discretionary spends, being on a hold by the companies. Now, the company has suffered a complete loss of sales during the month of April due to the lockdown, and the stores were not even open. There were no sales in the month of April. So moving on to, the month of May and June. In the jewelry segment, the company said that they have seen a reduction in sales by around 80%. They said that the sales in the month of May were only at slightly below 20%. So that is of the last year's sales. So when you talk about that, that is at below 80% around for the month of May, while in the month of June, it's down by 30% on a year-on-year basis. Now, this is obviously in the month of June, we are seeing slight recovery in the jewelry sales, and it's better than what it was expecting. They were seeing a lot of jewelry sales in the wedding jewelry segment as well. And the division has ended up opening 6 stores in this quarter, and 1 Tanishq store and 1 Mia store in this quarter. So that is quite a positive sign that they are seeing some signs of recovery as on a month-on-month basis. Talking about the watch segment, in the month of May, the revenue was down by around 95%, while obviously being a discretionary spend, even in June, the sales have recovered a bit, but still down 80% on a year-on-year basis. And the company did say that they saw a higher recovery rate on the e-commerce side as well as retail trade channels, where they have seen recovery for watch segment. And especially large format stores obviously are not going to work quite well due to the lockdown, and that is what is the reason with the company as well. And that large format stores are not recovering that well. Now, eyewear segment, the division has ended up closing 15 stores during the quarter, and the revenue is down by 85% in the month of May, while in the month of June, it's down by 65% on a year-on-year basis. So overall, the company has also postponed in launches to Q2, because right now it does not make sense as consumers are not spending much. And, the operations have, the manufacturing has almost commenced to its pre-COVID for all the operations have commenced. And, that is some positive sign, but production level is something they have to figure out, and they will see increase it depending on the inventory levels of the company. So let's see how the numbers actually turn out, right?
Okay, Vinny, thanks much for getting us the Q1 business update for Titan. Moving on to some PSUs, then the government is looking to push public expenditure in the second quarter of FY21 to help the economy revive from the COVID-related slump. Finance Minister reviewed the performance of public sector enterprises and asked CPSEs to push 50% of the capital outlay for 2020 to 2021 in the second quarter itself. Ruchi has more details on this. Let's get her on board. Ruchi, take it away.
The Indian government is looking to revive the economy from the COVID-19 slump, and as a part of that, Finance Minister Nirmala Sitharaman did a review meeting with 23 PSUs along with their line ministries to discuss about the capital expenditure of various PSUs. The word from Finance Ministry is very clear. They have set a target of close to 1.66 lakh crore rupees in terms of the capital expenditure for PSUs. But the Finance Minister said that PSUs should look to meet almost 50% of this FY21 target of 1.66 lakh crore rupees within the second quarter itself, in a bid to push the economy so that it revives from the COVID-19 slump that has costed the economy dearly, with many multilateral agencies pegging India's growth to contract by as much as 4.5% in FY21. The Finance Minister said that secretaries of the Department of Economic Affairs as well as Secretary of Department of Public Enterprises will be looking into some of these issues that have been faced by PSUs. Besides that, PSUs have also raised issues with respect to availability of manpower, the delay in imports as well as delayed payments as well. Some of these issues will be dealt with the Secretaries of Department of Economic Affairs as well as DPE Secretary in the days to come. This is an important exercise, the first of its kind that the Finance Minister has undertaken this year after the COVID-19 outbreak. So the word is clear that PSUs in terms of their capital expenditure will be doing some of the heavy lifting going forward in a bid to revive the Indian economy.
Okay. Thanks, Ruchi, for getting us that update. Earlier in the day, we caught up with Amit Burman of Light Bite Foods and tried to understand the demand trends post-lockdown. He also talked about the company's foray into cloud kitchen.
I think going back to the norm is going to be a very gradual process, with only some cities which have opened up. Delhi has opened up to some extent. Mumbai is still closed. So Delhi, I think at least some high street restaurants we've opened. The malls have opened. Bombay is still, all malls are closed. It is going to take a little bit longer than we all imagined to come back to norm. I think at least 6 months to a 70% level is what I'm looking at.
So how are you coping up with this kind of a decline in business? Are you looking at cutting down cost, operation, offering, brands? How are you taking extraordinary measures in these extraordinary times?
It's a 360 look at your business, and I think the new norm has, put us all restaurateurs to start cutting costs. Our biggest cost is, of course, the rental cost. Most of us have our restaurants on leased premises, be it mall or be it in a high street area. So we are working with a lot of our landlords as a partnering model to see how much we can work on a revenue share basis so that it's a win-win for both. I think the bigger mall owners like DLF and Select City are working very well with us and giving us those kind of partnering benefits. The high streets also have been very forthcoming and helping us to reduce our rent or revenue share. In terms of menu offering, also we have to rejig the menu so as to cut it down to much like 50% of the normal menu which we can serve in a restaurant, because only a takeaway or a model as such, our delivery model. So those are.
All right, let's now bring on board my colleague Pankaj to talk about a very interesting development regarding Tata Consumer. Hi Pankaj, good afternoon. What does the latest note on Tata Consumer say, and how positive a trigger is it for the stock?
So it's a new initiation which has come in from Credit Suisse, and their target price is 490 rupees. They have initiated with a 490 rupee target price. And when we, just look at the reports, they're very clearly highlighting that there are three pillars to their growth. One is the core business plus the salt business, which is growing steadily. Long-term growth continues to be as far as, Tata Starbucks JV is concerned. And they are positive as far as this name goes in terms of a re-rating candidate. They believe that, the valuations here are cheaper considering all the three businesses. They have done a sum of part valuation, and all these three businesses have different and steady growth as well as recovery, and that's just the reason for them to be bullish. Remember, it's an old company earlier known as Tata Tea. It was giving a lower PE, but now probably after things are changing, new MD has come in. It's that time that where people have gone ahead and started to initiate. Credit Suisse 490 rupees is the target price.
All right, Pankaj, thanks much for getting us the highlights for Tata Consumer. Let's shift gears and talk about what's happening in the tech space. We earlier in the day caught up with Ashutosh Gupta, the country manager India at LinkedIn. He advises youngsters to invest their current time in upskilling themselves and be ready for the post-COVID world. He also emphasized on the need for building a network during times like this. Listen in.
Absolutely. First of all, I think the pandemic has disrupted life and professions for companies across the globe, right? And they have thrust us into this business unusual world, right? We have dealt with financial crisis in the past, but a financial crisis or economic crisis coupled with a health crisis, that's a first for everybody, literally. So everybody's struggling, everybody's trying to find the answers. There are like unprecedented shock on what has happened, right? And during these times, the platforms like LinkedIn, we have our work cut out from a professional community perspective to really help and share insights and how it's going to shape up in the near future. So I think when we went into lockdown in early April, we launched LinkedIn Workforce Confidence Index. It was our way to figure out how a member or our professional community is feeling, where their confidence levels are, and do a pulse check on the confidence level. So I think it's a great way to connect back and also understand from the community on how they're spending their time, what are the top of mind things which they are thinking, right? So to your question, coming back to your question, what will be the new normal? I'll stay away from that phrase, Nikunj, but I would definitely say how things are shaping up right now. Whether it's a new normal or not, that is something which we'll have to see and we'll have to wait over the time. So I think first thing which that survey told us was confidence across the Indian professional community member base which participated in that survey is fairly reasonable. I would say the word I would use is cautiously optimistic. So just to give you a little bit of details on the survey, we poll on the confidence survey on a scale of -100 to 100. And we have been getting scores around 49, 50. The last one had a score around 49. And it has not really declined over the last 6 weeks, Nukunj. So I would say that cautious optimism continues. And there are many, many dimensions across this, which we will talk over next few minutes.